Good morning, traders, and this is your Aussie day trade setup for today, the South African top 40. Um, so a couple of things. We are changing strategies. So what I have here is two charts. Both of them are 4-hour charts. One is the Bill Williams on the left, and the other one is a refined strategy that I've been working on the last couple of weeks. And this is really just it's a trend following strategy, same as what the Bill Williams is. It just allows me to get into the market a bit quicker than what the Bill Williams does. And especially when it's volatile like this, it gives you better opportunities to make a little bit more money. Okay, so the concept's pretty simple. We have a 21 13 8 EMA, so exponential moving averages, and that replaces the Bill Williams, the alligator, but the concept stays the same. So the rules of how you get in and following the trend, etc., all stay the same. And then the only difference is we are using double stochastics of 2155 and 855. And the concept is they group to the downside, and we have a level. That's you're looking for an entry to the long. They group to the upside. Near a level, you're looking for a opportunity to be short. Okay, and then you're using the Williams percentage R 9 for the same kind of thing. So down the bottom gives you opportunity to be long. Along the top gives you the opportunity to be short. Okay, so holiday pattern here is pretty much range bound. Okay, and why I've got two screens on is quite simple. We want to be following the trend. The 1 hour, it gives me the trend. Okay, and at this stage, the fact that we're up and above the moving averages like this means we are ranging. There is no trend. And then this side, what we're looking for is the same scenario, but we're looking for a 12 minutes or a 15 or 10 minutes. Okay, before we get into the review of that, if you have a look here, you'll see above the moving averages, we're looking for longs. We're only looking for longs. Doesn't matter what happens, we're looking for longs. Until we get these closes below the moving averages, that's when you start getting worried and you get out of the trade. Okay, if you look at the lower time frames, you can see even through just for one day, you've got opportunities. Breaks below, comes back, tests, and then gives you opportunity to make some money through the day. Okay, so that's what we are looking for at the moment. So the key thing here is we are range bound with the holiday. So I've got my range targets in. Well, not target, but I've got my range levels in. We also have a bit of a triangle over the last couple of days it's forming. So it's going to be quite something brewing as far as I'm concerned. I think we're going to have a fairly swift move to the downside. The futures market is down at the moment. Overseas, Tencent is down 1%. And crude oil is up again because there's more bombings happening. And the US dollar rand 14.31, so that's pretty stable from Friday afternoon. So I suspect we're going to get a gap down. And I think that the trick is gap down, some kind of a retest before you get in. But I think you should be looking. We should be looking for shorts. The problem with coming out of the holiday season like this is going to take a while for our traders to make a decision on what they're going to be doing. So I am a bit wary. You could have a gap down and then a bounce off 51,278 where the gap closes here, which is bottom of range as far as I'm concerned. So that's kind of what I'm expecting. I'm expecting a gap down, some structure to be formed, and then a run back to the upside. And hopefully what we get is we get a retest of 51,600 area. And that would be our entry for a short, with anticipation of breaking below 51,278. But at this stage, we are range bound, so take it with a pinch of salt. We have to wait and see what happens during the open. So what I'll just do quickly is jump across to the Ichimoku. And I don't think it's going to give us anything new. So there we have bullish, bullish, bullish. But the fact that we're going above the cloud, below the cloud, above the cloud, below the cloud, that is ranging, okay? So your range, get your range in, there's your range, draw it in. That's what you're looking for. You're looking for a break up above 52,077 or break below 51,600. That is the top and bottom of the range, so that's what you're looking for. If we look at the 30 minutes, bullish, bearish, still range bound. There's nothing really there. Range bound, you can see Kijison, Dickinson flat. No, nothing that you can read into that. 4 hour, this is the one which you need to pay attention to. And you've got a bearish crossover here. So any break below 51,600, I would expect this gap close. We have another gap here. We have another gap here. We've got another gap, small gap here. We've got another gap here. So that's 1, 2, 3, 4. It's 5 gaps that we have to the downside. So I suspect we're going to have a rejection off this level and then a quick move to the downside. Probably most of the week, I would say. But you just need to be patient because there could be another test of the top of the range as well. Okay. So that's kind of the structure that I can see at the moment. That is bullish, but very far apart, so there is potential for a reversal. Okay. So yeah, so for me today, it is looking for a break. Pretty much, I'm looking for a break below 51615 or 51600. I need an hourly close below that, and then I need to see a bit of a pullback, and that'll give us an opportunity to be short. Okay. Until then, we are range bound. And I'm reluctant to trade the range because I have a feeling something's going to happen. We're either going to break down or break up, and I don't want to be caught with that. Okay, so for me, it's a wait-and-see game. If we do get a break below the range, I want to see a bit of a bounce back up. I want to see a retest of the break, and that'll be my opportunity to be short. Okay, anyway, guys, that's my view today. Pretty much bearish, I think, for most of the instruments that I'm looking at today, apart from some of the currency pairs. Okay, so anyway, guys, I hope that helps, and I'll catch you later. Cheers for now.